introduce Kyle Fry. He's the CEO at DIGTL, and he's going to introduce Jaime. They've got a very interesting topic around global digital securities exchange case, like a global NASDAQ. And, we've all seen what's happened in retail trading interests and what that impact is on the market. Today, we're going to have a deep dive on this. And we have two amazing individuals doing some awesome things in the space to talk about it. So how a 24/7, 365 global retail trading will transform investing. So Kyle, I'd just like to hand things over to you.
Thanks, Craig. Pretty excited to talk about that. There's a lot to unravel in the 24/7, 365, but really happy to be here with Jaime. I think what we're going to do is just kind of have a conversation as if it's Jaime, you and me here to talk about a bunch of different things. And I think one of the pieces will start to converge into the 24/7, 365 global trading piece of it. But maybe we start, and I'm sure a lot of folks are familiar with Jaime Rogozinski, but maybe Jaime, just do a quick background on yourself, and then maybe we just dig right into sort of what's topical for you today, and then we can dig into some of these other points as well.
Sure. Can you guys hear me?
All clear.
So, hi, thanks for having me. I'm Jaime Rogozinski. I am best known for having created WallStreetBets. I written a book about WallStreetBets. Well, I guess about retail trading, the phenomenon of social media and risk-hungry individuals that are taking on the market from a different perspective. The gamification of the stock market. I'm very involved in everything and anything that deals with financial markets in general, equities, crypto, just anything that has numbers that wiggles around on the screen. I very much enjoy. So thanks a lot for having me.
Thanks. So let's start right with where we are today. There's a lot going on. Maybe what's topical for you? What do you wake up and think about? What are you thinking about? What are you building? What are the big things that come to mind when you wake up in the morning?
I mean, I guess there's kind of different buckets for things that I think about, right? There's current events, and there's never a lack of current events that takes place. There's been a lot of interesting things that are kind of building up on each other. I'd say working backwards, this banking crisis situation, whatever's building up. I don't believe we have the full story yet. There seems to be a lot of unexplained behavior by banks and governments and authorities. Yeah, it's just like this just doesn't add up, right? So I'm sure we'll be able to get the debrief, whatever ends up happening. Hopefully it won't be too much, but we'll see. And then in the world of crypto, I've just been fascinated by it. And I'm not going to rehash it. I got the very tail end. Obviously, we're talking about FTX. Which followed Terra Luna, which I'm very fascinated by the Terra Luna. Like much more interested than FTX, even though FTX was more spectacular on the grandiose scale because of the money involved and the contagion involved. The the Terra Luna was more intellectually stimulating, right? Like, and it was also huge. So current events, I just like to stay on top of it, right? Like, what does this mean on the bigger scale? Like, what is the implications? How are we able to screw up on this magnitude, right? Like, what have we learned from previous things, whether it's crypto or the banking or whatever? The fact that the current problems as we understand them today are based on the fact that these banks were stowing their money on the safest possible the storage facilities. It's like, it's funny to me, right? It adds up. That story makes sense if it's true. But nevertheless, and then on the other side of things, it's always like, well, what else can we be doing, right? Like when I created WallStreetBets, the saying on the street, the insult that were being thrown around for investment banks were, hey, they're treating Wall Street like a casino. And so WallStreetBets got its name from wanting to wear that as a badge of honor. It's like, well, Wall Street is a casino. Let's just call it WallStreetBets. The newest thing is attacking the gamification of the stock market, right? How easy it is, how we get these apps with confetti animation. And it's addictive nature, whatever it is. And so that's what I got my eyes set on, not because some anarchist like twisted desire, but because I realized that there's a lot of good behind all of this, right? The involvement in retail traders, participants, gamblers, degens, whatever we want to call them, in the stock market does all sorts of wonderful things, right? It strengthens the system because they shake it, right? They try to break it and they get close to it, right? But then they end up kind of like learning from this and improving the system. And individuals themselves end up learning by having fun. They lose money. I've lost tons of money, but now I've learned how to make money, right? When I started with the stock market, I was YOLOing left and right and making money and losing money. And eventually I figured it out. Now I have kids and a mortgage and all these things, and I still YOLO, right? I lost money with Luna. I lost money with FTX, but I have most of my money in a boring, diversified, dividend collecting, whatever, like ETF, right? Because I get it now, but I had to go through this kind of trajectory of self-empowerment, and I don't have to pay for somebody to do that for me. And I see that lots of people go through that same thing. And so like, that's very cool that people can buy some out of the money call option for an Apple earnings play. And next thing you know, they're learning about modern monetary policy because they're trying to like, get the reinforcement on their whatever bet that they've made. So I want to further gamify this to get more people involved, to have more people learn, have more people enjoy it.
Perfect. So let's take that, and I think that's a perfect segue to the next piece. And even the last presenter mentioned about retail investors investing on narrative, all the way back to the WallStreetBets community. And I think it's probably broader than that. I think you're probably one of the most important voices in the space about the new modern investor. Maybe talk a little bit about what the WallStreetBets community stands for. What are they looking for? What is the thing? There's been a lot of investing in the NASDAQ stocks. There was a shift to sort of crypto. There was emergence of things, but is there a commonality, or what does it feel like this community is looking for? Like, what sort of solution, or does that make sense?
Yeah, there's no collective consensus, or the beauty of crowdsourced anything is the fact that it's just, the power comes from the fact that there is no directive. There's guidance, right? But for the most part, like, I don't pretend to be the brains behind any of the wonderful things that have come out of it. It's always been some hero that comes out, like living with his parents, college kid, whatever. Like that's how crowdsourcing works. And so GameStop is a spectacular event, and everybody knows about it, and it was a work of art. But prior to GameStop, there was a lot of, in the finance world, high profile, very sophisticated, cool shenanigans that were taking place that I'm a lot more excited about than GameStop because of the sophistication and sheer craziness of the matter. So there is no common purpose or goal, right? After GameStop, it's a common misconception to label or to assume that WallStreetBets is all about getting behind a particular stock and pumping it up, or fighting against some type of a short squeeze or whatever. It's not the case. That's just what happened with GameStop, right? Prior to that, they figured out how to like trick Robinhood into giving them infinite buying power. And that was cool. And what they were doing, they were calling that a cheat code, the free money cheat code. But what they were doing is it was like an asymmetric risk arbitrage. That's what CFA people would say, right? That's big fancy words for, we can click buttons and get infinite money to YOLO with, and we're too small to collect from. Banks were too big to fail. That's our competitive advantage, right? You Robinhood have more to fail by trying to come after us publicly than to just let us get away with this massive loss. And so they did that, and they got away with it, right? Some people lost money for free, and some people made money on somebody else's risk, right? It's sophisticated stuff. Prior to that, they, figured out how to use like stock options to do these gamma squeezes and push prices around. Like, and then sometimes they collectively push their research. They call it the DD, the due diligence. So they're looking for ways to make money, ways to have fun, ways to identify inefficiencies in the market, just like every other participant, right? Like quants do this, fundamental analysts do this, technical traders like to draw things on the screen do this. Meme traders do this too. They just do it in a way that they can do it. They're all just looking to have fun, hoping to make money. That's the commonality. What it looks like, I don't pretend to try and guess what they'll do next.
So if we take, and let's just, for example, 24/7, 365 markets and different asset classes and some of the stuff we've been talking about with you and doing, let's say we give you the clay mold and we say, Jamie, if you can take this clay mold and build it into what you want to deliver, or something that looks more like the financial infrastructure or the way at which people can interact with the markets today, and you could deliver a product or deliver a platform that looks like that, what would that look like?
Look, I've always been a proponent, even though it appears like there's anarchy behind all of what I celebrate, there is a method to what I hope to do. All right, I'm hoping to turn Wall Street into the next esports event, right? Like, it's crazy, but there's a reason for doing this, as well as for everything else, which is to try and make things better for everybody. I've made my case for individuals, and I'm starting to make the case for the systems. Like when I wrote my book, for example, I identified lots of systemic weaknesses with the stock market, such as, for example, specifically, I said, I don't believe that brokers have undergone the proper stress testing to be able to withstand, the stampedes of these crazy traders. And sure enough, after the GameStop hearing, that's what they concluded. They say, hey, brokers, you need to step up your ability. Yesterday, I saw Credit Suisse. I don't know what this is about. I want to dig into this. They were like, why did you fail? Why did you go out of business? I thought he was going to talk about the bonds. He made a reference to social media traders. I don't know what that's about. I'm not going to make any assumptions yet, but I'm very curious as to what that meant. Nevertheless, there's systemic risk there, right? So to answer your question, what would this platform look like if you're able to deliver? Let's push the boundaries. 24/7 trading is a wonderful example, all right? Because I can actually go from abstract to real. If you have Elon Musk deciding to say, let's see, what was this? He was doing crazy things. Like with Twitter one day, he decided to say, I'm going to sell Twitter. Or no, he said something about Tesla. He'll sometimes tweet things on a Sunday, right? And enough to push the stock of whatever company he owns around. And you can't do anything about that. And if you were a long position or a leverage position or using some type of derivative, you're in kind of bad shape. By the time Monday morning comes around, all the people that pay more money than you to stand in line at the stock exchange have already beat you to pricing you out of whatever disaster he caused with this tweet, which means you're going to lose money. And so if on a Sunday you have access to this thing, then you can hedge your bet, right? If you're long and he tweeted something that's going to make it go down, then you can short, right? At that moment that just, or you can profit from it or whatever it might be. That's wonderful. Why is it wonderful? It's number one, you don't lose money. Number two, you're going to start pushing the stock market to start taking on 24 trading. There's no reason why the stock market shouldn't be open 24 hours a day. That's another systemic risk, right? Like liquidity events, that's a huge problem. Gap risk. I mean, I'm not getting technical here, but when you close the stock market and then things happen and then you open the stock market, that's a problem for banks and money and everybody, right? Because you can't control what happens in between that open and that close, and things break. And so there should never be a reason. Crypto fixed that. The ability to synthetically, I don't know how you guys would consider doing this, but having a 24/7 stock would be a really great way to pressure the stock market into getting their act together, because everyone would benefit from a system that doesn't break as easily. We've had so many close calls to systems breaking because of really random little flukes. And closing the market is one of them. The February 18th of February 23rd of 2018, I think, somewhere around there. The VIX, or it was some volatility ETF, an inverse volatility ETF, like broke the entire freaking stock market. Like the S&P went down 5% that day, and it dealt with rebalancing of the futures of the thing, but whatever, because on the Wednesday, the Monday or whatever, like they had to close the market and front runners. And it was like an idiosyncrasy with the fact that 4 o'clock was coming that day and people had to do stuff because of that 4 o'clock. And then the market broke, right? Like, had the market not closed at 4 o'clock, the stocks wouldn't have fallen 5%. So yeah, that would be a wonderful thing. And having kids or retail traders have first dibs on this opportunity gives them an opportunity to profit too. So that's wonderful. Nobody can complain about that.
Yeah, and I think there's implications of different and more asset classes as well. I mean, as you know, the things we've been working on and building, and some of the things we've been talking about are, our trading platforms 20 hours a day, hopefully 24/7 soon. You can invest with Bitcoin, fiat, crypto, so different funding methodologies. Given there's a global investor base, markets should trade 24/7. We should have access to other asset classes. And the other thing that we've been talking about with you is the creation of products the community wants. And so, you sort of made it a joke a while back about tracking Pelosi and creating a Pelosi portfolio, but this idea of how can we give 1% of the companies millions of dollars listed on NASDAQ? Is the WallStreetBets community, should they only have access to Twitter and MicroStrategy and Tesla, et cetera? Or is there a whole new world of asset classes as well that we can put together and provide access? And I think that plays into sort of accreditation and retail investing rules and other things, but venture, real estate, carbon, digital assets, et cetera, well beyond just what's in the stock market. But having 24/7 access to, NASDAQ related stocks as well as other asset classes, and or, a big part of what we'd like to do is, hey, community, what the hell do you guys want? What are you interested in? How can we originate, source, and create products that you want to add as well? What are your thoughts around, sort of interest in that?
I think it's wonderful, right? Like I think that there's a proven benefit to having community come up with stuff. I mean, I haven't seen any updated studies, but at one point, a couple of years ago, there had been some, master's level university study that figured out, or at least compared the stock picks on WallStreetBets to the S&P, and I forget what methodology, but they concluded that on WallStreetBets, the stock picks outperformed the S&P, right? That was a pretty quiet study because it's academic and had a lot of words in it, and WallStreetBets attention span is more for memes, but that's a pretty cool conclusion, right? It's validation that crowdsourcing works to some extent. So giving people that modular ability to just come up with stuff, that's awesome. Two, giving the tools necessary to come up with those things is equally as awesome, because that innovation is massive. Right now, that segmentation of market of saying, well, you're in the United States, and so you can only buy these stocks, and you're over there, and so you can only do that stuff. That limitation hurts everybody. It hurts the individuals that are, fortunate or unfortunate enough to be born somewhere. Second of all, they also don't have access to stuff that resides elsewhere. Second of all, the actual markets themselves suffer from it, right? Like having increased liquidity to stuff is good for markets. Let's not forget the financial markets serve a productive purpose. For WallStreetBets, it serves as leisure, but for finance, it serves as price discovery and liquidity, and actually for raising capital, and they are capital markets after all. There's a lot of things that gets translated into jobs in the economy and all these things. So if you can further increase the access without breaking the system, right? Because countries like to get protective about their own economy and whatnot. So if you can allow regulatory frameworks that are still in place and not violate those, but open the doors to people elsewhere to participate. I'd love to be able to buy Samsung shares or Nintendo shares or whatever, but I can't. I have to, hope that there's an ADR on the stock exchange, and then like I don't know, it's a huge problem because they don't day trade as well, and I like to day trade because of different hours. But if you have a 24/7 thing and everyone can just buy everything as if it's a share, like if it's a crypto thing, you can bundle it up on the blockchain, whatever it is, like make everything a ticker symbol on the same page without having to worry about what exchange it's on or what network it's on. If it's, it's a ticker and you buy it and it goes up or down. If it's the Nancy Pelosi tracker, I saw that somebody came up with like an inverse Jim Cramer ETF. That's hilarious, right? Like, it's wonderful. It's wonderful. Let's increase liquidity in all these instruments. Let's create stuff that allows people to make money. Let's actually signal to the world, right? Let's not forget that if you end up having a lot of participants in any of these particular instruments, that pricing information is useful to people. All right. Right now, everyone's looking at the freaking bond market, like the U.S. Treasuries. So I don't know what's going to happen on Wednesday, given all this crazy turmoil, because they're assuming that the stock market is a better predictor, the financial market's better predictors of what Jerome Powell is going to say on Wednesday than whatever Jerome Powell said he's going to say on Wednesday. Right. So that's useful too.
So maybe we dig into, my initial reaction to things like esports or trading. When we think about what we're building at Digital, I'd say if we had to pick and choose, we would say we're building the infrastructure for investors, not traders. Exactly to your point around how trading creates markets, it creates liquidity. There's all sorts of different pieces here, right? Like the fact that someone can go spend all of their money on lottery tickets is insane because the government's able to get taxes, et cetera. But yet now we have all these rules about, are people sophisticated enough to make decisions on their investing? What are your sort of thoughts and perspectives? And just sort of thinking about, again, this esports idea and trading. And, the one thing I would say is people pay attention where they put their money. And I think that making it more entertainment based, I think would be a positive in the idea that folks would be paying more attention to it. They'd learn about it, they'd get interested, and it would be sort of another way to get people to read about it, understand how someone's doing something, why they're doing something, and in that way creating education. But how do you think about, sort of this idea behind, the average person or person that's investing and how they become, or should they become, a trader, right? Like people get smoked in crypto. Well, crypto's a mess. It's unregulated, insider wash trading. There's nasty shit happening all the time. In the stock market, you're probably seeing similar stuff with hedge funds and lead order routing and things like that. But how do you think about sort of people and trading and esports and gamification of the trading side versus sort of where they are and understanding for, being an investor or sophistication, and how do you sort of, think about those pieces together?
Well, first of all, I do think it's funny just on the opening remarks of your question about like the government trying to protect people from losing money, and they tell you to like put your money in Silicon Valley Bank or Credit Suisse or whatever. But like, and then those people are like sweating bullets, hoping the government comes in to rescue them. They didn't have to do that. Like, thankfully they did, but we don't know how that story ends. So it's not like putting your money in a bank isn't gambling either, right? So the beauty of what WallStreetBets does is it unapologetically calls things what they are. Granted, it's not the same thing. I get it. That it is taking things to the extreme, but to the other extent, it's like, risk is a risk, right? You can you can dress it up whatever you want to, but I think it's best when you label it as such. But when it comes to the entertaining nature of I can't tell you the number of people that are in the finance world that have thanked me over the years. And I give talks all the time at like serious investor conferences. And they said, I've been trying to get my kid to learn about finance forever. And they think it's an Excel sheet thing, discounted cash flows. And, and they just love it. They're just telling me to buy stocks and giving me tips all day. And I don't care if they're wrong about what they're saying. I love the fact that they're telling me to buy a stock because of whatever stupid reason they think is the right reason. because they know that's how it starts, right? It's like, everybody, I remember perfectly what my idea was, when my first stock was Google, because, I don't remember my full reasoning behind it, but I bought those shares on, when they IPO'd. But I also remember buying, or attempting to buy, I didn't succeed, to buy another company called Vodafone. And I remember that one too, even though I didn't buy it, because that was the first voice over IP phone back in, like 2006 or 7. And I was like, hold on a second. This is a telephone that allows you to make long distance phone calls through the internet. So I can call Australia and not have to pay $3 a minute. That's just great. Right. This is the future of whatever. I'm going to buy so much. And I wrote this long email to all my friends and explaining to them why this is the future. Turns out that investment would have sucked and it lost a lot of money. But I remember that example because I was wrong. I was not wrong about the idea. Voice over IP is wonderful. I'm using it now, that same technology, to be able to speak to people all over the world. But that didn't translate into a solid investment thesis, right? Turns out that a good technology for the future doesn't make it a good thing. So all of a sudden, my thesis on so my learning began at that moment, and it's wonderful. So if I can get people to say, hey, learn how to do this as a game. If you can watch other people do the equivalent of playing World Series of Poker, right? And you're watching a player just clicking on stuff on the screen, and you're watching them make money or lose money, because that's just as entertaining. You're like, wow, that's an idiot. I would not have done that, right? Or wow, that guy's really smart. I wouldn't have thought of that. Or wow, that looks really easy. I can do that. Any of those things, whether any of those three comments are accurate or inaccurate, that person goes and tries it themselves, then they'll probably go out and lose money. It doesn't matter, right? Like, let's be honest with ourselves. But that losing of the money will be meaning if they try to actively trade, right? Active trading is most likely to lose you money, but it's going to teach you a ton of really cool stuff about the market, about how it works, about risk management, about like execution, about theories, technical trading, quantitative statistics, fundamental, whatever you like. You don't have to learn everything. Or you can learn that it turns out that you hate that because you vomit every time your money goes red. You decide to actually hire a professional to do it for you. That's fine too, but at least right? And you won't sit there. Thanks to me losing all this money when I was learning, I don't feel bad about knowing that I lost a wallet with Bitcoin on it a long time ago, because I know intuitively that I never would have held on to that Bitcoin up to 60,000, whatever it was. And, and nobody would have sold it there and then bought it back at 5,000. Nobody does that, right? Like, it's very few people have the testicular fortitude to pull something like that off, right? Like, and that's thanks to me actually doing hands-on learning, and that's what I think people could really benefit from, because they could be honest about how the markets work and what the difference is between hindsight bias and woulda, coulda, shoulda, whatever. Nobody coulda, woulda, shoulda done anything perfectly, right? Like, turns out that buying and holding is actually the best strategy if you want to build wealth, as I do now with my long-term retirement account. I still enjoy gambling because it's a ton of fun and I've become really good at it. But I still lose money, and it's still I don't know. It's wonderful. I'm more empowered thanks to this journey, and I think that other people could be too.
That's great. I think we're down the last minute, so we'll have a last question here. Let's fast forward 3-5 years, looking back. What does success look like to you? Like, what was your impact, what you built, how you thought about it? If you look backwards, what would feel impactful in terms of what you're trying to do with the movement?
I would say
maybe that's a 2-hour question, but you got 60 seconds.
More people, more engaged, more having fun, right? Lines being blurred between entertainment and education. Line being blurred between all the divisions that currently exist between different market types, crypto, futures, derivatives, geographies, time zones, whatever. But, I want to be able to see a ticker symbol, which you can just purchase on a thing that is fun. You can actually cash out for fun, or real money. I mean, and then tons of participants just reinforcing the learning in the system.
Great. Well, appreciate the time. Glad we could join and chat about this. And honestly, it sounds a lot exactly, what we're building at Digital as well. So more to come there. Appreciate the time.
Awesome. Well, thanks so much for having me. This was wonderful.